Let's go now to the economy and the help that could soon come for millions of homeowners. The Obama administration's $75 billion housing rescue plan will take effect in March, but ultimately, who's it going to help? Joining me live is housing expert Dani Babb. Good morning to you.
Good morning.
This is a key question. There's a lot of money proposed here.
Yep.
Who's this going to help? Who's going to get left out?
It's going to help people that own a primary residence, that have 150% or less loan-to-value ratio, so they don't owe more than double what their home is worth.
Okay.
50% more than what their home is worth. And it's going to help people who can get their payments dropped to 31% of their debt-to-income ratio. It's going to leave out jumbos, investors, and it's going to leave out anybody that's, of course, above 150%.
Okay, but there's a little bit of growing outrage here from homeowners who do make their payments on time. Many of them are feeling that the offer for help goes more to those homeowners who bought too much house at the time when that was something that was easily done. Banks were willing to lend, but they really couldn't afford to do it. They got in over their heads. Yeah,
absolutely. In fact, I wrote an op-ed for The Street on exactly this issue. And the outrage is growing. We know about 94% of the nation is paying their mortgage on time. Now, VP Biden's economic advisor came out and said that the government needs to share the pain with the banks. What that really means is the taxpayers sharing the burden with the banks. So there is growing outrage over that. The argument is that foreclosures obviously drop the price for everybody. We know that in a hard-hit foreclosure area like Nevada, that the prices drop about 9% overall.
Look, how many times have you and I talked about the housing market being the epicenter of this whole economic crisis, right?
Yeah.
And President Obama admits this plan is not going to save every single home, but you've got $75 billion going into it. Is that enough?
To actually create a real difference, it's not going to be enough. That's about $7,500 per home that's in foreclosure, and most of these people are between $50,000 and $70,000 underwater.
Wow, $7,500 per home that's in foreclosure. I haven't heard that statistic.
Yeah, 75 billion divided by the 10 million, right?
Wow.
Yeah.
So those people that do see results from this plan, how soon is that going to happen?
Well, we're looking between 30 and 60 days, depending upon which plan they choose, from the time it's instituted in early March. So if you're going through the bank, expect 60 days. If you're going through Fannie and Freddie and you're just doing a loan modification, probably more like 30.
I'm curious, with anecdotally speaking, with the market right now, you've got lower mortgage rates, you have reduced prices in houses. Has this increased people getting out there and buying? I mean, is it a good time to do it?
It has. I mean, we've seen about 7% increase just in 1 week in potential sales, and it's not even the spring buying season yet. So I think it is encouraging people. We have exceedingly low interest rates. Banks are now subsidizing the rates. They're prime minus, which is really good. And of course, there's tons of homes for sale out there.
So does that mean that banks are now lending again? People can get mortgages?
They're lending if you come in with 20% down, and if somebody else will buy the mortgage. So if you're in a jumbo market, the two coasts, pretty much unless you're coming in with 30% down, you're priced out of the market. So that's a big problem. It's going to continue to be one.
Well, this is interesting. We're going to see if this helps things. Anyway, Dani Babb, as always, good to talk to you. Thank you so much.